and he's just amazing at raising money. He said he would drive by country clubs and look for places with like really nice cars. And if they had really nice cars, he knew these guys have money. And so he would park and he would just go in and be like, hey, can I guest the clubhouse? And they would go, yeah. And then he would just mingle.
Welcome to the Real Estate Marathon Podcast, your guide in the race to financial freedom through real estate investing and sound financial practices. This podcast is for anyone interested in learning more about real estate investing, personal finances, and a new take on traditional retirement. Now, here are your hosts, Larry Fierro and Mike Moe.
What's going on, everybody? Welcome to the Real Estate Marathon Podcast, your guide on the race to financial freedom through real estate investing and sound financial practices. Here today for the part 2 of Daniel Wood from the Momentum Property Education. Mr. Fierro, how about that?
That's awesome, man. He filibustered and said he got a part 2, and he was actually shooting for a part 3, but he ended up finishing up quickly. So that was good.
Yeah, man, it's just you can't have more than 2 terms, right? I mean, we've identified that. You can't have a third term.
No, third term.
That's all you got. You get 2. That's it.
We had to cut you off. You know, you can come back around as, do part B maybe as a vice term. I don't know.
there you go, yeah.
Dude, you're throwing me all kinds of off today. I can hardly see you with all that camo on, man.
Yeah, that's right. I got the orange camo, though, so you can just kind of, you can just get the head out. That's it.
Nice. But yeah, it's going good over here in New York. It's been a long week, and we've got a lot of good stuff going on at the Real Estate Marathon Podcast. And
Heck yeah.
I'm very excited about some of the stuff we got coming up. But how's everything going in Minnesota?
Dude, it's just, another day in paradise. I'm really, I'm thinking back to our Monday morning motivation. And I'm taking our own advice of leaning in. We got just so much going on here. Like you said it with the Real Estate Marathon Podcast, and we're getting heavy into due diligence on this 24 unit that we're under contract on. And yeah, dude, it's a fun week, man.
Yeah. Just lean in. That's what we're doing. We're piling it on.
Heck yeah. Lean in.
And that's all you can do. Just keep that momentum going, and, be surprised when you finish the race that fast because you've been cranking on the momentum so hard,
Dude, it's funny how some things just kind of seem to be the first domino. Like we got this property under contract, and then not 24 hours later, there's 2 really, really enticing properties that we're looking at right now, literally blocks away from this one, that we probably wouldn't have found if it wasn't for this deal. So it's
nice.
Yeah,
nice. And I'm just going to throw this out there. Is there any seller financing involved in this deal?
There might be. Nice. There might not be. It's a going back and forth right now.
Well, you know what? It was never an option before, and then you put it in your tool belt. So if it is, it is, and if it isn't, you found something else in your tool belt. So that's what it's all about, my friend. Creativity. Yeah,
that's a perfect segue, man. As we're talking to Daniel Wood about the 25 sources of capital, and you guys should have 25 new tools in your tool belt as far as different creative ways to close a deal. So after this one, which is going to be, it's exciting, man. This is a good one.
It is. You want me to jump in here and start the warm up?
Do it.
All right. I picked real estate fund because he talks about one of the ways to finance deals. A real estate fund is a type of mutual fund that invests in securities offered by public real estate companies, including REITs. What does that mean?
Man. You remember when we had Murdoch on the show, and he was talking about their fund? They're publicly raising money to put in to basically pool everybody's funds together to buy properties, and then obviously get a cut of that property, that the profit that property makes. So, like you said, a REIT is kind of a cool way, a liquid way of owning property. It's very similar to buying a stock, but backed by real estate. So it's a cool way of doing that too. But yeah, fund, man, is just everybody piling their money together. Usually you have an asset man, like a manager who's buying the deals and acquiring the deals and managing the deals, and then you have the people who contribute to the fund. Sit back and collect passive checks every month.
Yeah, and with the fund, they don't actually have to have the properties identified when you invest in it. So they can actually go after the fact and use your money to buy those properties.
Yeah, which is cool. Yeah, for sure.
It is very. Well, that's everything I've got for the warm up. I think everybody's ready to get this race started. You want to jump in on part 2 of Daniel Wood?
Let's do it, man. Yep. This is the ultra marathon. This is the second half, and let's get to it. All right, Daniel Wood, welcome back to the Real Estate Marathon podcast, our first ever part 2 episode, man. You had so much content, so much knowledge the first time around. We had to bring you back so we could wrap it up and make sure that we got everything out of your brain and onto our listeners' plate. But welcome back, man.
Yeah, thanks. I appreciate it. See, I was able to filibuster my way into a second episode.
You did a fantastic job with that. Just don't let it get out, because then everybody will be filibustering.
Exactly. Well, I'm going for episode 3 now, so we'll be fine.
Nice. Well, this recorded is going to release a week after part 1, but it's actually been 2 or 3 weeks since we recorded that first part. So we're kind of interested in getting a recap and hearing what you guys think I had going on.
Yeah, I mean, it's been actually a really interesting couple weeks, and I'll go through the first 11 that we covered, and I want to mention one of them because you kind of caught me out on a question last time, and I've kind of fixed my resume now since then. So
we challenged you, and you rose to the challenge.
Well, we'll see. We'll see what the crowd thinks. But yeah, so we talked about. We're talking about the 25 source of capital. We got through 11. So we talked about bringing on angel investors, structuring it as a loan for interest, joint venture, or as a partnership. We talked about doing an equity raise. We talked about peer-to-peer. We talked about crowdfunding. And that's where you guys caught me out. And you asked, have you ever crowdfunded a deal? And embarrassingly enough, I had to say no. But what was funny was just an hour after I got a text from an acquaintance of mine who's just funded a new crowdfunding platform. Or actually, I should say they funded it about 3 years ago, and they've done deals through the platform for themselves because they had that license. But a month ago, their license came through for them to be able to raise money for external developers. And so they reached out and they said, Daniel, we're going to be taking on 3 external developers, and we want you to be one of the first 3. Yeah, it was really nice. Cool. So apparently someone thinks I'm doing something right.
You're back for part 2, so we do.
Yeah, I filibustered them too. That's just what
part
it is.
Part 3 to come.
No, but so they reached out, and in all these things, when you're looking at how to structure these deals, it all really comes down to the terms, because that's what I think is so fun with having 25 sources of capital. Because what happens is we'll get a deal come in, and then I look at it as a puzzle. You get this piece, and then you just got to look through the 25 sources and kind of go, wait, this one could fit, but that one would fit better. Oh, wait, this is the perfect one. Let's put that together. And then you put them together that way. And it all comes down to the terms of the source of finance. And it turned out that this crowdfunding platform had a very specific, like, this is the money you'll get. You'll get the money in up to 18 months. We want, monthly interest payment for the investor. We'll charge, the platform will charge 2.5% up front, and then we need to offer the investors 8% per annum. So it was like, all right, so these are kind of the details. The good news was they'll actually loan us 90% loan to value. But the real kicker comes, it's not 90% of the purchase price, it's 90% of the valuation.
Oh, wow.
And that's where it got really exciting, because that means if we buy at a discount, all of a sudden we can get the deal 100% funded.
Wow.
You might get paid to take that deal, right?
Exactly. The one thing, though, we have to remember, it's a short-term loan, so it's only 18 months. So I can't over-leverage and then in 18 months go like, oops, sorry, I can't pay you. I have to have my exit. Yeah. As I realized, there was one, because right now with the way the global economy is, I don't really like the idea of doing flips, because we don't know if a crash is coming or not, or, if the governments will bail us out. So flips would have worked, but I realized there was another way to kind of structure this deal so I could buy and hold the property. Mm-hmm. And that was by buying a property based on a bricks and mortar valuation, like, a regular market valuation. We call that bricks and mortar in the UK. Mm-hmm. But
nice. I like
if we buy it at that with a big enough discount that we can get it fully funded, certain types of deals you can get what we call a commercial valuation. which means the valuation is based on the rental instead of what it would actually sell for. And so in the UK, we have a strategy. It's called an HMO, which is a house of multiple occupancy, which basically means you buy a house, you rent it by the room to multiple tenants. So think of it as like a dorm for students.
Yeah,
would be
similar
like
student housing deals, yeah.
Yeah, exactly. And so in the UK, if you buy a house and you have at least 10 rooms, so 10 different tenants, they'll say, well, this is no longer a family housing. No family needs 10 rooms. And most families, that's true for, right?
Yeah, most.
Most families. A friend of mine has 8 kids, though, so he'd be good with 10 rooms. But, for the rest of us. But so there, they'll give you a commercial valuation. And usually the commercial valuation is higher than the bricks and mortar. So I went to my team and I said, look, what I need is I need at least a 10-bed HMO. I need it already to be fully tenanted because I need to be able to pay the monthly interest right away. I need it to have a valuation, a regular bricks and mortar valuation that we can buy at least at a 20% discount to cover all the fees and everything. Mm-hmm. And then I need the commercial valuation to come in at, about 25% higher than the bricks and mortar. So it's like I had a very specific, this is what I need.
Specific, yeah.
Yeah. And I'm so blessed because I have a great team that finds me deals. I mean, they are amazing.
Excellent.
They're really the engine that keeps everything else. That's why I can focus on the 25 source of capital because I don't have to worry about the deals, which is very nice. 24 hours later, I get a text. I'm like, hey, Daniel, we found it. Wow. And it's insane. I'm like, wait, what? And they found this deal. It's valued at £500,000 and we can buy it at $360,000.
Wow.
It does need about 45K of work. So, all in all, we'll be in maybe 410. But based on a 450 valuation or a 500 valuation, we can borrow 450. The commercial valuation will be at least 600K, meaning we can easily get £450,000 in the remortgage and pay off the initial. And it's already fully tenanted, so it can cover the interest payments along the way. Wow. So we'll actually be able to do this and get 40K extra out up front.
With no money no money down.
No money in, just get 40K. I do have to pay £250 to start the loan application. Mm-hmm. So poor me. And we did have to pay £500 to get the survey done. But I'm okay with that. Yes. But that's the parenthesis. It's not no money down. It's £1,000 down. So give me $1,000 or so down deal.
Now, theoretically, theoretically, how many deals could you afford to do where you're getting $40,000 out every closing with no money down?
Exactly.
Just throwing it out there, hypothetically, infinitely. Right?
Well, now I can do another 40 with that money. And what's actually really fun, though, is that one of the guys in my team then texted after a week when we've been working this project, he texted like, hey, my solicitor just called. He's got he's a lease option solicitor. He said, I just got a portfolio lease option that was supposed to go through that just fell through. And he says that the seller really needs someone to come in and take it because the portfolio is underwater. So guys we'd need about 15K. Do we want to do it? And we just looked at the first HMO deal and said, well, we have 40K. Yeah, let's do it. Yeah. So essentially, we just got an extra 20 properties thrown
no money down.
No money down. And so, once you start structuring and putting these things together, it can get so exciting.
That's why we love real estate. It's so creative and you just get your brain rolling and you're just all over it.
Which is crazy because when you start real estate, the only way you think about buying a property is 20% down, 30-year fixed, your traditional stuff. And now as we're talking to you, obviously we got 25 different ways that you can mix and match and, different combinations of things. And man, you're right. You're only limited by your own creativity with how you can take down these deals.
Yeah, and we're starting to expand a lot of people's horizons. They're thinking and they start thinking outside the box from some of the stuff that we've said, and it's a good thing.
Yeah, and I love it. I mean, and this is only the financing side. I mean, then there are all these ways to get. We're talking no money down deal, but that's in reality though. I'm putting down £450,000. It's just not my money.
Right.
But there are other ways to structure the deals like you do, Larry, with the seller financing. That is, if you would say, true no money down deals because there's literally no money being transferred over. So, you can do those kind of structures and get no money down deals. Or if you have to put down money, there are 25 ways to do it. Yeah. And so there's just so many options there.
So we've done 11 of the 25.
Yeah. And, right. So I just got through the first 6 there. Then we talked about cryptocurrency. Then we got boring and said that one of them is your own money. It is an option. If you have money, that's an option. You can pull out your home mortgage. You can use a cash advance, or you can use a consumer mortgage. So obviously we talked about them in depth last time. So should we get into the new ones?
Yeah, let's jump into number 12.
All right. So number 12 is now we really start getting into where you need contacts. So the first 11, I would really say those are like the starter ones. So when you're just starting out, that is what you use. Once you get a little further down the line, you can access the ones we're talking about now. So we actually broke off at a great time. Last one.
That was 101. Now we're into 201.
Exactly. So this is when you take that next step. And that's where you can start talking to like investment companies. Because a lot of investment companies focus on stocks and the stock market, but they do love diversifying their assets. But often the people that run the investment companies are, stock guys. That's what they know. And so they need someone else to come in and kind of partner on the property side. And again, you can use the three structures we talked about with regular angel investors. You can borrow money and give them a guaranteed interest. You can joint venture with them, which is something they generally like. Or you can do a combination and give them a fixed interest and a share of the cash flow. And it just allows them to go, all right, we want to have 40, 50, 60% of our assets in property. So we're going to put that there. You run that, and then we're going to do the rest in stocks and crypto or whatever else they do. And you can be that partner for them. And, as you know, investment companies can have incredible amounts of cash, which if you can get a hold of 50% of that, that's pretty fun.
Yeah, definitely.
How do you get connected with folks like that?
I mean, that's really just getting out there. I mean, actually, a great example. I had a friend of mine on our podcast, just like when we had Larry on the podcast. I interviewed him and I asked him because he is amazing at raising money. His name is Justin Whitmore, and he's just amazing at raising money. He said he would drive by country clubs and look for places with like really nice cars. And if they had really nice cars, he knew these guys have money. And so he would park and he would just go in and be like, hey, can I guest the clubhouse? And they would go, yeah. And then he would just mingle. Nice. And he's like, I love it when I am, the poorest person there. And, he's super successful property investor. But if everyone else is even wealthier, that's where he starts making contacts. And he's just a very nice, open guy. I can't do that. I can talk like this, but I have a camera protecting me now.
Yeah.
He can walk up to anyone in a bar and become instant buddies. If you have that ability, again, just troll some country clubs and you'll find them. That's where they're hanging.
Awesome. Nice. That's a good idea.
Yeah, so that works. If you're not that social, I mean, there are business networking events where they'll literally pair you up for you, and you can meet people, and they'll
speed investing, like speed dating.
Exactly, yeah, and they'll literally say like, hey, why are you here? You'll say, well, I'm looking for investment bankers, and they'll say, great, here's our investment bankers. We'll connect you with them, and they'll help you in. So there are lots of I would say pre-crisis, there were lots of places that would do that. And I'm sure most of them have shifted to online and you can do it digitally now.
Yeah. Nice. Cool. Nice. All right.
So that's one way. And really the next couple, they're in the same vein. Next one is private placements or private banking. Mm-hmm. So, the banks or, private banking banks, they are constantly looking for companies to invest in, properties to invest in. And, they work with partners. It's not, you don't have the people working at the bank are not the ones out there looking for the deals. Again, it comes to connections, though. You have to build that trust and credibility to be able to be the one where they go, yes, this is the person we're going to be bringing our clients to. But the moment one bank just says that, you're never going to have to think about money again because they'll be shoving tens and tens of millions of dollars your way and you'll be fine.
So that, that's a client comes to the bank and is looking to, get some of their assets into real estate, and the bank has a few select people that they know can execute on that, and they pair you up with that. Is that kind of how that works? Essentially.
Well, I mean, the private bank, obviously they're all different, and the banking sector is shifting a lot right now. One of my mentors he is one of the founders of the largest private banking bank in Switzerland. And so he said, especially in Europe right now, they're having a lot of new regulation come in, and the market is really changing. But the classic way they would do it is, if you guys came in, imagine I was the the private banking manager, you'd come in, we would look at your assets and we would kind of go like, all right, so obviously you guys are very property heavy. You have all these property assets. We got to diversify. And then you'd get access to, they have types, investment products that regular people just aren't offered. So they would give you a type of like stock product that might be defended against downside, would have a protection against the downside, and you get to keep the upside. Which is pretty cool in the stock market to not have to worry about the market going down, right?
Yeah.
So they could give you something like that. If you are a regular person who has a lot of stocks, they might go, well, look, we got to give you other assets as well. We need to put 5% in gold. We need to put 30% in property. And so the person's going, all right, great. How do I put this in property?
Yeah.
And then they might say, well, all right, so what we need to is either you buy it yourself or you buy it through us, which is obviously what they would recommend. And in those cases, they would use a partner, and we'll get to that, is actually source of capital number 17, but that is to set up your own fund.
Oh. Nice.
So you can set up your own fund, and that is really when the private banking banks would look at you and go, well, this is a property fund that is perfect for our clients. We'll just push the money in there.
Cool.
Nice.
We skipped one. And then the next level there after private banking, because it kind of goes like, if you're a regular Joe, the first time I went to a bank, I was, my mom took me when I was 12 and I was going to get to place my savings, right?
Yeah.
And they brought up, they had this little scale where they said, so these mutual funds are green, these are yellow, these are red. That's your risk. What do you want? I'm like, well, I guess I'm taking green. That's all they gave me. Once you're a grown up, they'll say, hey, do you want this managed fund or that managed fund? And it's essentially the same principle though. But once you get a certain amount of money, and it's different between all kinds of banks and in different places of the world, but once you get to a certain level, that's when you're offered private banking and you get that real advice and those special products. The next level above that, when you have, I've heard numbers of as low as $30 million in disposable cash, but I've also heard minimum numbers of 300 million. So it's somewhere in that range, and it'll be different companies will offer different products. Then you can start or join a family office. And family offices, that's for that's old money, that's wealthy money, that's like full service concierge service, and they'll manage your funds. And I have some friends that work with a lot of different family offices. Right now, we're sourcing some hotels for family offices, which is nice. Our commission will be fine.
We'll do all right.
Yeah, we'll be all right. It's like a $200 million hotel. So, just getting a couple percentage points out of that, we're okay.
Go out to lunch.
Yeah, I'll be able to buy my contact a nice dinner for that.
There you go.
But no, so they have just ridiculous amounts of money, and they need someone to place it, and they're looking for really secure places. And if you can get in with them, get them to loan you money. I had one of my friends he was actually a very new investor who got in with some of them. They said basically, well, all right, so we're willing to try you out, but we're going to try you out really small first, and then we can go big and we can do it properly. And he's like, all right, yeah, sure. What you thinking? They're like, well, we'll start you on 5 million euros, and then we'll give you a real investment.
All right.
I'm good. 5 million euros. I'll take it. They're just playing at a different league than the rest of us in the rest of the world. So if you get in with them, that is fantastic. The next one is we call it bank placement. It's essentially when the bank invests their own funds. And I kind of use this as a kind of tell-all for like insurance companies and banks. Insurance companies place a lot of their assets in property. And you could be the wholesaler, as you guys say in the US, the sourcer, as we say in the UK, that provides them the deals. You could be the joint venture partner. You could be the management agent, whatever role you could take there. If you got an insurance company or a bank who's placing their money and you're a part of that chain, you'll do well.
Nice.
Let's just put it that way. Another one is the same thing with funds, like, mutual funds and, ETFs, whatever, all these that do real estate funds or manage funds who want to different assets. You could be one of their partners that provide them the deals or manage the deals or even a partner for them in it.
Nice.
So that's number 16.
Okay.
Number 17, we mentioned you could run your own fund, which is surprisingly cheap. Well, let's not say cheap, but it's a lot less expensive than you might think to start. So what I would generally recommend, and don't take this as like financial advice now, but there are companies like law firms that basically run the accounting and legals and have the licenses for funds. And what you can do is you can kind of sub-license, you can borrow their license and create your own fund. They will then do all the financial reporting. They're the ones who are, SEC regulated and everything. And you've just paid them a fee because it doesn't really cost them more to do it. So in the UK, we found some really good ones that would charge us around £100,000. I would guess it would be right around the same price range in the US. There are those who'll do it cheaper. You might want to stay away from the very cheapest ones. And there are those who'll charge you $1 million. But I've seen pretty good ones at around 100,000. And then you have your own fund. You have to check, obviously, the fine print. How am I allowed to raise money? But it does open a lot of doors, and it opens a lot of credibility to say, no, you're not lending to me. I actually run a fund that you would be, this is a mutual fund you'll be putting your money into.
Nice.
So do you think on running your own fund versus finding other almost like funds and banks and institutions that you can kind of source these deals for, if you run your own fund first, does that give you more credibility to then open up those other doors easier? I guess is there a natural order of operations to try these out based on your skill level and experience?
Yeah, I would say you start with the 11 we spoke about in the last episode. These are kind of high level, so to speak. So you would start there. But then it's kind of, as you say there, Mike, it's a bit of a chicken and the egg, because it's like, obviously if you own your own fund, that gives you a lot of credibility. And so then going to the banks and saying, hey, you can place your money in my fund and I'll manage it for you, is obviously a much easier pitch. But on the other hand, it does cost you money every year to run the fund. So if the fund doesn't have, I think the usual we say is somewhere between 3 and 5 million pounds of assets under management. And it depends, obviously, again, the terms. What are they charging you to lease the license? But to get to that point, you have to be able to raise that money. So one way to do it as well is if you would say, all right, I'll wholesale for you, Mr. or Mrs. Bank or investment company or family office. And then while we're building this relationship and I'm making some money, then I go and start my fund and I come and say, hey, I've been helping you guys for the last couple of years. You know what I can do. I've actually started my own fund and I think I can make you a lot more money if we do it through my fund. And this is my proof. That way you don't have to be worried that you'll have these carrying costs that, kill your fund performance because your fund is too small.
Gotcha. Very nice.
So it kind of depends. Excellent. It depends. If you can get access to $10 million without using them, then go for it. Start the fund, get $10 million in, and then tell them, hey, look, I am a legit player in this market. Yeah. And then it's usually around the 10 million mark is what my mentor always says. Once you hit the $10 million mark, then the institutions go, all right, good. now we can start giving you 5 million, 10 million. And then as that grows, that just keeps going up.
Nice. And that was 17.
That was number 17. Yes.
Nice. You
the
really
next
are
one,
going for number 3.
Yeah.
I'm impressed.
Yeah, we're going for it. We're going for it. I can filibuster all day.
I could listen to it all day.
The next thing you could do is you could set up a corporate bond. Yeah, that's something we're working right now with my mentor there, the guy I've been mentioning, the banker. We're setting up a corporate bond that will that's where you can create all kinds of complexities to it. You can just set up a corporate bond, which essentially means you're borrowing money at a fixed interest, and that puts money in your bank account, and then you can use that money to go out and buy property. Usually the interest rate on a bond is less than you would offer a private individual because it has a little more air of legitimacy. But it will all come down to what rating you're able to get on the bond. We're working on right now, we're going to be issuing a bond hopefully in the next month. But knowing how banks work, I would say probably in the next 6 months.
They're not fast, are they?
No, it takes time sometimes. But when we issue that bond, we're aiming for at least a AA rating.
Right.
And what it will do is it will give us 70% loan to value on the portfolio, which will allow us to go out and buy it. But what's interesting is the way we're structuring it is they will have first charge on the portfolio, but we're then splitting the ownership. So we're splitting the land ownership from the property ownership into two, which means that when we then go and we take the actual buildings and go to the banks to get lending on the building value, they don't really see the fact that the bond, because the bond owns the land, but if we don't pay the land rent, they can claim the buildings. But for the banks we're going to be borrowing money from, they see the buildings as unencumbered. Gotcha. So they're looking at it and saying, these have zero loans, so fine, we'll give you 70% loan to value.
Nice.
So we're first getting 70% loan to value off of the everything, and then we get another 70% loan to value on the 50%, meaning we're getting our 100%, and we can buy a portfolio no money down.
Just brings a tear to my eye, I gotta tell you. Give me a minute,
so
I'm choking
beautiful.
up.
So beautiful.
It is, it's beautiful. Okay.
Well, there's a lot of complexity there, and we have.
I was going to say, you make it sound a lot more simpler than I think it is, right?
Yeah, it's taken 12 months, and we kind of invented this structure, and it was me and my business partner kind of go like, well, this is great because my mentor said basically I can give you 50% on it. You just got to, fund the other 50%. And then he gave us the kicker where he said, but the portfolio has to be at least 100 million pounds. And we're going, well, I don't have no 50 million pounds.
Yeah.
So how do we do this? And that's where we started bouncing things around. And then we brought in a law firm as a shareholder in the business. So they came in and they helped us with the structure. And then we brought in an accountancy firm into it, and they helped us even more with the structure. And then we brought a valuer, a surveying company, and we didn't actually have to give them shareholding, luckily, because we now had a pretty cool board of directors. So they kind of went, all right, this is legit. And they kind of helped. So now we have the legal opinions from all three that we're then going back to the banks and going like, hey, this is what we're doing. It's legal. It's correct. It is a twist on what everyone else is already doing. So, there is a background for it. And probably, I should say, they will give us our AA rating, which will then allow us to do the whole structure.
Nice. Excellent job.
So there's a little more into it, yes. But if you do it right, then it's very, very fun.
Very good.
Yep. Then on to 19. 19? I think we're at. Yep, 19. You could borrow money from a company. Well, actually, 19 is actually 2 because we just call this company loan. So what you can do is you can borrow money from another company. So a limited company or LLC, they could loan you money just like an investor. Or you could actually take out a loan if you run a company that's maybe not a property company. If you have a consultancy firm or so, you could apply for a business loan, which you then could use to buy property. If you do it right, there's always legalities when you're moving money between companies. So again, take actual advice.
Yep.
Did we lose Mike's camera?
He'll be back. He's got
He'll
kids.
be back. Yeah, let's just wait till he comes back then. That's all right. You can cut this out maybe.
I can.
Yeah.
I'm very he's got kids.
The kids at the door.
Yep. I just want to make sure that, all right, cool. So we're So yeah, make sure you're always bringing on the right legal advice there when you're doing that. But that's an easy way to borrow money in and transfer the money over.
Nice.
Yeah, so we're almost through. We only got 5 to go. Well, 6 to go. We got number 20.
No doubt. It's
power
been
through?
So great. Yeah, let's power through and
do it.
Power through. All right. So number 20 is something that Richard Branson, I don't know, I'm sure you guys have listened to his or read his biography, Losing My Virginity.
I
never
have not. It's on my to-do
you guys
list,
have
though.
to. It is amazing. Richard Branson, or Sir Richard Branson, I guess I should say, is one of the most amazing entrepreneurs of all time. And he's so open in his book to what he does wrong, what he did right. So Losing My Virginity was number 1. And then he followed it up with number 2, which is Finding My Virginity. And in it, he shares, what really powered his business is he was using an overdraft facility all the time. Yeah. He would be, when he was starting out, they would go 100,000 in debt. And then they would have a good, that was when they had Virgin Music or Virgin Records. So they would have, new artists come out and they would make lots of money over a weekend. Then they would get back to 0. And then they would do something else and go back into 100,000 debt. And then they would be pounding there. And as time went by, that got bigger and bigger and bigger. And finally, they were working on like $30 million or pounds, actually, of overdraft debt.
Yeah.
And that's what that's when he started, Virgin Airways. Mm-hmm. And he was actually forced by the banks to sell Virgin Records to be able to pay off that overdraft. So that was kind of the sad part of the story. But what it shows is, you can be working on an overdraft facility. He built, literally a company sold for like a couple $100 million based on just running on overdraft, just running on borrowed money the whole time.
Yeah.
So that is number 20 is apply for an overdraft facility. And, that way you don't have to worry about the timing in the same way of cash, because that was what was going on for him is, he was making the money. He was, every couple months or so he would pay off the overdraft, but he was spending the money before he made it. But he would always make it. And that way, as investors, we know that occasionally our timing isn't right. We're expecting a refinance to come through and we're doing this other project. And all of a sudden the refinance gets delayed and we're kind of going back to the builder or whoever and going like, hey, is it all right if I pay you a couple weeks late? I'm going to be there. But with an overdraft facility, you just pay, you get a little bit of interest and then the money comes in and you save. So it gives you a little more options.
Nice. Assuming this one should be used, kind of like we talked about the cash advance, with a very, very high, expectation that whatever you are expecting is going to come through, right? Like you got to be pretty certain that that payday that you're banking on that is just not aligning with, some of the other business activities is coming through, right?
Yeah, 100%. That's one of those, just as you say, the cash advance or consumer loans, make sure that the money you expect to come is actually going to come. Because otherwise you'll end up like Richard Branson and he had to sell this company that he loved. He just signed he'd signed his 2 dream stars, like Janet Jackson and the Rolling Stones. Those were like, when they started the company, that was like, oh, if we could ever sign those, it would be so amazing. And it was like 2 weeks after signing them, he had to sell the company.
Yeah.
And so, for us as property investors, imagine buying your dream deal and it's all going brilliant. And then they call in your overdraft and you're like, oh, all right, the company's gone. So, make sure you know what you're doing.
Yeah, definitely.
Awesome. All right. So number 21, this one's actually one that I use a lot personally, and that a lot of our students has found is like a very nice one, because all these things I'm talking about is like, you have to have contacts. You have to kind of have a lot of courage to go out and say, hey, give me money to invest for you. So 21 is that you can actually outsource the task. There are people that work with just managing other people's money or finding money for deals. Just like, your wholesalers, there are essentially money wholesalers that can do the work for you. And they're often looking for deals. We always think that there are so many deals and there's so little money. But you have people on the other side who are going like, we literally have billions and I don't know what to spend it on.
Yeah.
And if you meet someone like that, you go, hey, I can figure it out for you. I'm fine. I'm here. I'll help you.
Pick me.
Exactly. It's like, billion, I'm here. And, there are lots of people like that. Obviously, some of them have billions and they're harder to get a hold of. But there are others who they might have a couple 100,000 from people they know and who are like, what can I do? And you can go, hey, I have these deals. You'd give me that money. I'll just cut you in on a share. You have zero risk and you make a part of the profit.
Mm-hmm. Yeah, this is awesome because if raising money is not your skill set, but finding deals is, then you find somebody whose skill set is raising money and you guys make a fantastic partnership, right?
Exactly. And the good thing is you don't just need one. If it's one that's amazing, that's enough. Then you go with it. But you have the option to have 20 people like that.
Yeah.
I'm right now, when we're working on these different hotel deals, I have 14 different chats open with professional, money havers. I don't know what you call them. They're essentially deal getters for some of the wealthiest families in the world. And we now have little WhatsApp groups with my team in the UK and with their agent. And all I'm doing is putting that together, going like, well, guys, find something, get the deal to go through.
Yeah.
And they do all the work.
Perfect.
Awesome.
Yeah, so it works well for me, but even for Barry, my partner, and Richard, my partner, they have all this money, so all they have to do now is find the deals.
Yep. Excellent.
All right, the next one is a big one. This one is when you've come pretty far, you can do an IPO.
Mm-hmm.
So you can do, initial public offering. You go onto the stock market. That will raise an incredible amount of money into your company generally, but it also requires a lot, and you need to be a big company to do it. But it's one of those things, and it's a great way if you want to then cash out as the owner without having to sell each property. You can do an IPO and then slowly sell off your shares, and the company is what the company is.
There you go.
So that's something that will come for most property investors, it will never come.
Yeah.
For others, it will come very far down the line. Honestly, I don't think I'll ever do an IPO because I kind of like my little company, it's mine.
Yeah, there you go. No answer to anybody.
Exactly. Well, I do have my investors, of course, but overall,
there is that.
Yeah, but I know them all, right? I don't have a shareholders meeting. I can't have a corporate raider that comes in and tries to take over my company. It is, I've hand chosen everyone I work with.
There you go. Excellent.
Or handpicked, I think the word is. Next one is, and I don't know if this exists in the same way in the US, so you guys will have to answer this for me. But in the UK, we'll have, councils will often have different projects they have because they need more housing in the UK. Mm-hmm. So they'll create grants where they'll say right now, if there's a house that is not being rented out, if you buy it and are willing to, put it out onto the market, we will give you a government grant for, it could be 10,000, 20,000, 30,000 pounds to refurb this property. And it could be just refurb the roof or the interior or everything. And they're structured either as an interest-free loan or just a gift of money. Which is really nice.
We do have grants in the United States. I'm not sure that you'd have to look into each individual grants over in this country, but that is a great program, it sounds like.
Yeah, I mean, it's awesome.
A lot of times, at least in my limited experience with this side of it, if the government's trying to incentivize investors to come in and clean up properties or areas, things like that, a lot of times they'll do it in form of additional tax benefits and things like that.
Right.
But guaranteed rent, where the government will subsidize the rent and essentially pay a portion of that rent to the investors. But a lot of government programs that, if you know it, sometimes a lot of overhead, additional paperwork and things like that, but it can definitely be a good opportunity.
Yeah, and that's something to always just study in your area. And usually you can just call the council and kind of go hey, what are your grant programs? Mm-hmm. and, or just who's your grant officer, and then you just create a conversation relationship. What's great, I mean, a lot of investors see the counsel as the enemy, right? They're the ones with the red tape for us to go through. And what that creates for us, though, is a really great situation in that when you call them and kind of ask, like, hey, what is it you're trying to achieve in this area? Can I help? A lot of these officers will get so happy, like, wow, that's so nice that you're involving me. Well, you know what? Right now, we have this area that we want cleaned up. Can we give you some money to do this? You're like, well, all right, I'll take some money. That's okay. Yeah, I figure it out. I'll find a deal.
Exactly.
Yeah, there you go.
So just, obviously, yes, they do create trouble for us sometimes with their regulation, but try to use them as a partner in every time they actually can take that role. And as a grants, that's a brilliant part. And even like in the UK, we do the HMOs. That creates you need a very specific type of like counsel. They need to give you the right planning and stuff for it. You need to have your license for it. And talking to them before you buy the property, they often get really excited and go like, yeah, we'll come in, we'll view the property for you, and we'll give you the list beforehand of what you need to do to get this deal, to get your license, which is really cool.
Yeah, that's awesome. Yeah, one of a really successful investor over here in the Texas market, John Montiero, kind of always says, "Don't fight the Fed, don't fight the government. Understand the rules and regulations and figure out how to use them to your benefit." Right? They are, they're there, for whether or not you like them or you agree with them, but you can always use them to support your business and not try to fight against them. Right?
Mm-hmm.
Yeah, well, that's what they say. There are only two things that are certain: death and taxes. Yeah. Right? So, you can't fight the taxes, but as you said, the governments will have all kinds of tax programs. And if you ask them about it and say, look, hey, I'm happy to pay my taxes, but what are you giving right now for me to help you? They'll say, well, here's your smorgasbord, pick and choose. And that's pretty awesome.
It is.
Absolutely.
It is.
So then we only got 2 to go, which is fun. So the 24th is, and this actually comes from the first job, well, actually second job I ever had. I was 15 years old, and I was one of these horrible telephone sales reps that called you and disturbed you at dinner. I was one of those.
I think I talked to you.
But the cool thing, though, which is kind of fun, I've come kind of full circle. What I was calling people to do was I would call them and I was inviting them to seminars about investing, which is really cool considering what I do now.
Yeah.
Put on seminars about investing.
Exactly. Now I teach. But it was an investment company, a fund that I was calling people, and I was giving them a free lunch if they would come and listen to this presenter talk about investments. And I turned out to be pretty good at it, believe it or not.
I can believe.
And so they bumped me up, 15 years old, to start calling companies. So I was talking to CEOs and the CFOs of companies and going like, well, are you really managing your cash accounts well? It's a cocky little 15-year-old, right? But what I learned, which was really interesting, is that most of these, high-powered executives were going like, what are you talking about? I'm like, well, look, you guys are, you have millions of turnover, and you have all this money in your bank account that's, it's going in and out. And a lot of it is staying in because most companies make a profit every year. And so I asked, what are you doing with all that cash? And most of them, they don't have, because companies are so busy trying to make more money that the money they have is basically just lying there, and then they'll pay a dividend. But, the rest is just sitting there in a bank account. And if they're lucky, they're getting, 0.1% interest. And so what the goal of that company was for me to book these CEOs and CFOs onto these meetings. And they would sit down and they'd say, look, you have $10 million in your cash account. You need to have a $1 million accessible on the moment, on the day. So what we can do is we can put that into, this type of asset that will give you the money right away if you need it. Now we can take 3 million, because that money you wouldn't need for, you would always have a month advance before you needed that money. So we can put that in this type of asset that gives you a month advance. Now the last 4 million, you'll need 6 to 12 months advance. So what we can do is we can put that into our property fund that has a 6-month, payout period. And so they would stage the money, and, they would take a big chunk would go into their property portfolio. And so you could do the same thing, work with companies and literally look at their bank accounts. And again, you have to be cocky, but these CEOs and CFOs were listening to a 15-year-old, right?
Yeah.
So, they just don't have time to do this. They're busy going for the next quarterly earnings.
Mm-hmm.
But then thinking about what do we do once that earnings hits our accounts, that's something they don't have time for, because they have to go for the next quarter.
Yep.
And for you to come in and get them to put that money with you, or let you manage it, or whatever, that is a huge opportunity.
Very big. Nice.
Yeah. All the regular disclaimers, though, make sure you do it legally. But
yeah, sure.
But that is a great opportunity. The last one. Wow, we're actually at the last one. We made it. Number 25. This one's very close to my heart, because last year, me and my wife Gisela, we started our own charity foundation.
Mm-hmm.
So we're, as always, we try to do things big. So we're trying to fight global warming. We're fighting for equal rights, and we're doing it by promoting and supporting good entrepreneurs. Because that's where I think it comes in, is if entrepreneurs have that understanding that by, that culture, race, background doesn't matter. It's, we should be a merit-based economy. Whoever's the best for the job should get the job and should get paid what they're worth, no matter who they are or where they're from.
Right.
And the entrepreneurs that understand this, they are the ones that are going to change the world.
Yep.
And the same thing, if we act responsibly to our environment, then, our kids will also have a world to live in, which I, as a father, think is a good idea.
Absolutely.
So what we want to do is we're supporting entrepreneurs on that. Now, what makes this interesting to an investor is that as a foundation, we will be funding different charitable projects. So obviously a regular investor won't get access to that. Occasionally they could, we could be funding a project, like if it's an environmental project, it could be improving the, energy performance rating of houses. That could possibly be a project that an environmental fund would fund, meaning they would actually pay you to refurb your properties.
Right.
So that's an application you could do, which is cool. But something else that foundations do is generally they don't give away all the money they have, because they want to they're in this for the long haul. They don't get $10 million in and then they give away $10 million. They get $10 million in and they want to turn that into cash flow, so that they can give away $1 million a year for the next 1,000 years. And so how are they going to generate that cash flow?
Yeah.
Well, that's where we come in, right?
I got you.
So that's something you can do. And what's so cool about it then is, yes, you'll be making money. You'll be earning money on foundations, which can sound harsh and that sounds callous. But at the same time, you're giving the foundations cash flow, allowing them to do good for decades to come.
Very nice.
Yeah, I mean, all businesses, whether they're not their foundations, nonprofits, or for profit, they need to be funded, right? So whether or not you're keeping the money, giving it to shareholders, keeping it for yourself, or you're using the money to fund, obviously like things like you're doing with these foundations, they need something to continue and to function, right? So
yeah, and they don't want to always be looking for new people to give them money. At some point, They want to say, no, we are fully focused on delivering the value. And once they have an asset base that is enough that they might have 10, 50, $100 million a year coming in from their own cash flow, now they don't need new contributors. They are now a self-perpetuating charity that can fix, any problem in the world, because they'll have they'll have so much money.
Yeah.
So that's something we are working on with our foundation as well, and working with other foundations to support them to become, this self-perpetuating machine Because imagine having charities just give every year millions without, and if new people donate, that's awesome. Then they can give even more. Yeah. But even if donations completely dry up, like in a down economy when people can't afford to give as much, these foundations will still have the money and they can still move and they can still do their projects.
Excellent.
Yes. Awesome.
Wow, 25. That's incredible. You did. I'm very, very impressed, and I appreciate you coming down and sharing that with all of us, pretty much.
Well, it's so exciting to me that you can do all these things.
Yeah.
Do you have a kind of like a summary or kind of a one page or content online where people can go to kind of review all 25 of these sources of capital?
I would say yes and no to that. It's we don't have any free course for that, but we have included it in our course Freedom Property Intensive. Oh. So in Freedom Property Intensive, you don't just get the 25 sources like pretty quickly as I went through them now. You get a deeper walkthrough of them. You get the checklist as well as all the other education that we have in that program with the 30 steps to doing your first deal from wherever you're starting today.
Very nice.
Awesome.
Very nice.
That's very cool.
Now, where can people find out more about your companies and connect with you?
Well, so everywhere.
Right here, first next week.
Yeah, exactly. I'll be back again. I didn't filibuster enough, did I? So the Momentum Investing Podcast is our show. We have amazing guests like Larry Fierro. That's actually been one of our most popular episodes, talking about seller financing, which was really, really cool. We got Kim Kiyosaki coming on now, so that's confirmed. So that's super exciting.
Wait, I was on before Kim Kiyosaki?
Yeah, you beat Kim to the punch.
I am so honored.
Yeah. So now we're on Kim. So, we're going downhill. Larry, it's all downhill from there.
I'm glad you said it because I was going to say it.
So we have some amazing guests, and what we try to do is we combine like property investors or celebrities like Jordan Harbinger or Kim Kiyosaki with like property professionals. So we've had an accountant on, we've had a project manager, we've had an interior designer. And the interior designer episode was brilliant. She taught me how I can increase my rents by 20% just by decorating my home differently. So there's some great stuff there on the podcast. If podcasts aren't your thing, which I'm expecting it is because you're listening to this episode.
Absolutely.
But otherwise, I would, we're on Instagram. I have a great team there who are publishing videos and pictures and tips and advice on it. All you have to do on Instagram, search for Momentum Property Education, and you'll find us there. That's also our website, momentumpropertyeducation.com. And there you have links to all these different resources. So that's probably the hub to kind of go to. Nice. Or if you really want to connect with us, it's in our Facebook community. So our Facebook community is called International Property Investors. So I do a live Q&A in that group every single week. So you can ask any question, and I do my best to answer. So far, I've been able to answer all the questions we've got, and we've done this for a few months now. So far, so good. But we have a lot of experts who are with, and we have everyone from total rookies who've never done a deal to experienced investors with over 100 properties. So we have that whole spread. And it's just a great community where people are helping each other out, supporting each other, created businesses together, done deals together. So it's just a great community. So that's a great way to connect. Excellent.
Well, Daniel, I appreciate you coming back a second time. And I will come up with a third topic because we definitely want to have you back. You have a wealth of knowledge, and your creativity just impresses me and Mike. I'm assuming Mike as well, because he's just in there.
Yeah, my accountants hate me. I'll tell you, every time I talk to my accountant, he's like, Daniel, how do you always come up with a way to be my toughest client? He does love me, though. He gets to invoice me for a lot of money, so he does like me.
Yeah, man, like Larry was saying, the way that you're putting together some of these deals are really impressive for, some of the things that we've never even heard of before. So that's awesome.
Yeah. Thank you. I appreciate it. Well, it was an honor to be here and for everyone listening to put up with me for 2 full episodes. I really appreciate that.
All right. Awesome. Take care.
Yeah. Thanks, Daniel. Appreciate it, man.
Thanks.
All right, ladies and gentlemen, that was Mr. Daniel Wood from Momentum Property Education. And Did he educate us or what, man?
Oh man, he did. He educated us, and I got to tell you, from last Thursday to this Thursday, I was kind of anxiously awaiting the release of this podcast episode. So, people weren't sitting on the edge of the seat wanting to hear the last 15 items. And
right, yeah, exactly.
Here it is. You guys. It was a long wait, 7 days, and here you go.
Oh yeah, for sure. We got there, and now, like we said at the beginning, now you guys got 25 new tools in your tool belt to go explore and figure out how you can use to put together some creative financing on some of these deals. So, and I said it, I don't know, 6 times now. The creativity that this guy brings to these deals is fantastic, man, and it just goes to show you there's no shortage of different ways you can put together deals. It's part of the reason why I love real estate, because it's just so much creativity can go into it. It's not just going to a bank, putting 20% down and buying a property that cash flows a couple $100 a month. Way more ways to buy a property than that.
Yeah, my favorite one is still hands down creating his own cryptocurrency backed by real estate. That just blew my mind when he said that. I was like, "You're doing what?" Yeah,
yeah, I don't even have words for that one, man.
No, that was just awesome. That was awesome. So, what do you think? Call to action?
Yeah, dude, we're going to be boring, and we're going to have the same call to action as we did the previous week, right? So we got a couple new sources of funding that we've identified during this episode. If you don't know, if you're not familiar with one of them, which I'm assuming out of these 25, there's at least 2 that you're not really familiar with. Maybe you've heard of it, but you're not really familiar with it. So dive deep into it, understand it, start doing your education on it. Maybe find somebody who's doing it or is an expert in the industry, and see if you can jump on one of their calls, or you find a webinar or podcast that they've been on, and jump into that specific niche of funding. And you may, same as we were talking about last time, you may not have a deal on the table that qualifies for it, but it doesn't matter. It's bolstering that tool belt that we're talking about. And so next time a deal comes along, you can look at it from a couple different angles. You're not just looking at it from the same angle that everybody else is looking at it from. You can look at it with, this type of financing angle or this type of funding angle. So it's good to have all these different tools in your tool belt.
That's it. You can never have too many tools when you're trying to build a financial house.
No, dude, build a financial empire. You need a lot of tools for that.
That's it. So, well, this was just a great episode. Lots of useful information. Hopefully you guys took away some nuggets of it and can implement it for your financial security. So
heck yeah, man.
That's everything I've got for the nice folks tonight.
All right. Thank you guys for tuning into another episode of the Real Estate Marathon Podcast. We'll see you next time.
Take care.
Thanks for listening to the Real Estate Marathon Podcast. If you found value in any of the content from this show, consider supporting us in the following ways. Subscribe to the Real Estate Marathon Podcast. Leave a rating and review. Continue the conversation with like-minded individuals on social media by heading over to the Real Estate Marathon Podcast Facebook group, or follow us on Instagram and Twitter at Real Estate Marathon Podcast.